Hey everybody, DayTraderRockStar here, and kind of a market radar going into the next week, which would be the week of December 10th. And just an update because the market has been so volatile the last 3 or 4 days. Just incredible volatility coming in here, and it's a combination of news, the inverted yield curve. You're hearing a lot about that. You're hearing topics about the trade war, the tariffs. And there's other things out there that are kind of lingering over the market. There's even some technical levels that people were talking about the 50 when it crosses over the 200 period moving average. They kind of call that a death cross, and that's supposed to be happening at that point. So I want to break down the chart for you on my side. I'm big on divergences of the momentum. A great signal. And the last time we had this signal, I have this little program that kind of measures out the divergences for me, and then it'll mark it on my chart here. And the last time we had that divergence was back in October, November, that October low, and it was a good one. We took that trade and we did well. We traded that up, and when we say take that trade, we really get more aggressive when the market's in your favor. Right now, even though there's a lot of cross currents, there's a lot of negative stuff, but not the negative stuff that fundamentally values the market lower. It's just a lot of distractions in the market. One of the analogies I always use, especially when you trade these fast momentum type of stocks, is when the music stops, the market drops. And I'm not going to say that that's the situation here with the S&P. There is a lot of news out there though that's pushing this market around. So let's talk about the levels that I'm paying attention to. And again, this is an important thing right here. I am waiting for a signal like this, and this will, it'll show up. And I have a feeling that it's very close to being a divergence. We have to see how the next few sessions are. Our stochastics are rotating down, but price is already underneath the previous low. So we are starting to see a little change in the momentum here. So if this momentum starts to shift before the price, that's what we're looking for. It happened back here last April. It doesn't happen too often. That's the good thing about this. So, it hasn't happened yet, and I can't come out and say, but when it does, you'll know about it. I'll know about it. Well, at least members of Day Trading Radio will know about it. I can't guarantee that I'll be putting out a video on it. And the last time before that was last April. And again, you can see these have been just tremendous moves from that point. Again, from this one, and now the next one. We don't even know. We might be in the process of this one. We're just kind of riding this trend line. Like I said, we have a trend line right here, and we have this, what we call I want to explain this to you right now. We had a pivot area up here, a pivot here, and a pivot here, and we had this 1, 2, 3 pattern. We came up to it, and we chopped around it, and then we had some news. Remember, we had the G20 news, the potential pushback of the tariffs of 90 days. Anyway, the market took that as a positive. And we popped up here, and I think going into that we saw some positives. So I don't know if this trend line was really technically tested, or the news broke us through it real fast, and then we just kind of came back into the right direction where we're normally doing. This trend line will continue to hold this level. Just was based off of news, this whole thing, and just pretend this wasn't even there, and the market bounced off of here and just rotated back down. So I would continue to watch the lower trend line here. It's a couple of levels I like. February lows, a lot of people talking about February lows in that 25-50 area, give or take 50 points. And then we have this lower trend line, and I've traded these trend lines a lot. It's just about being at the right time in the right place. And wherever that ends up, if that eventually ends up down here, it could be anywhere underneath that 2500 level. Do we get down there? That's a tough call. Going into the new year, going into the Santa Claus rally, the very seasonal effect of the markets. I still think we have that upside. And then we have the January effect, which way January goes, the year goes. But then Congress comes back, and they're talking about the infrastructure plan, and I have a feeling that would be a big boost to the markets. So that's around the corner. January. I don't know when that would play out, but I know that it will be brought to the table next year, early next year, and I think that will be some some positives for the market. Do we chop around into the end of that? I'd watch this level. I'd watch for a divergence. I break down the 60-minute time frame, and remember this thing: hold on to your cash. This is one day you have good news, one day you have bad news. Wait until the setups and you have a normal market condition, and we can actually start taking our positions like we normally do. That's what I kind of advise today. Here's a beautiful divergence back here that we traded, and it was a nice spike down. It was an easy divergence, and it was a nice move up. And we have the channel down and the channel up, but now you had the gap down. We closed the gap. We're pushing that. We're right on a line. We're right on a big area right here. Break down through it. We could easily see 25.50. We don't have to, I've seen, I wouldn't put so much into that. But I do think that if we are break down through that, there's going to be a lot of more eyeballs on for more downside. Any positive news out of China definitely has to have at least a short-term effect on the markets as a positive. We kind of get through that, and we don't even know where that's heading now. It's all up in the air. So, and finally, well, I guess what I'm saying is just kind of try not to be aggressive at this point. Excuse me, I'm getting over a cold, so I'm trying to hold back some cough sometimes. Don't be aggressive here. Wait for your better setups. Save your capital until it, till it just becomes an easier trade. There's going to be times with major volatility in news. It makes it great for traders. You have big swings and stuff, 30, 40, 50-point swings. And if you catch it right, yeah, you're a hero. But if you catch it wrong, it's just the opposite effect. But I prefer to let the methodology work for itself. When the methodology is working and things are very, the market is stable and in a rhythm, the methodology works great. And it works, that's why we call it a high probability, because it works more at a very high probability, you know what I'm saying. It's been a long day. But when there's news driving the market and there's just the volatility, the VIX is spiking and stuff, things overshoot their levels. So you might have a good support line down here. We might shoot down. Big reversal candles. What we'll have to watch now is watch for these candles. Maybe on a 60-minute time frame, pay attention to a reversal like this. Also oversold on the 60. It does help. Oversold on the 60. Oversold. These are the bases we want to get. So going into next week, we're going to be oversold on the 60. There's no doubt we're probably going to have an up day next week. Let's get through Monday. Let's get through Monday and Tuesday. And then I want to revisit the markets, put out our watch list, our official watch list. I kind of went over all the setups. There's still some new setups for this week for the members. But like I said, I would be very cautious for the next two sessions, Monday and Tuesday, and let the cream rise to the top and see if we actually break down through that 2600 level on our way down to 2550. Doesn't seem that far, and other things. So I'll leave you at that. Leave you with that. Have a good evening. See you in the markets.